Hi, this is Mark with ValueCharts.com. We are looking at a short position I currently have in the December Euro currency futures contract. Basically, the idea behind this trade is that this market has become extremely overvalued according to value bars on a daily basis. Now, certainly, just because this market is overvalued, it's been overvalued for portions of the bars over the past several days, certainly, and has had a very strong upsurge here, in large part due to the Fed's action or the perceived action by the Federal Reserve associated with QE3. So this has now taken place. This market is significantly overvalued, and with today's action, it just looked to me like it was possibly slowing down here. So this wasn't really the catalyst, if you will, for my trade, but certainly after QE3 came out, this market surged upward as we expected, and since really this week began, today is Monday, September 17th, we've seen this market kind of stall out. So my logic here is that if I could identify a low risk value entry point, which I did, we'll go over to the intraday price chart here looking at 5 minutes, but essentially I was looking at a 30-minute and 60-minute price chart earlier and look to short this market up in the moderately overvalued valuation zone on value bars here applied to 30-minute price bars. So that was my entry point. I should have been, unfortunately, I didn't see I wasn't at my desk when this market surged up into significantly overvalued. That would have gotten me a much better entry price right around the 130, 174 level. But I did initiate a short position right around the 131.56 level, which was still within the moderately overvalued price range or valuation range. So right now this trade is up around $1,100, and I've actually put a break-even stop here at let's see, at my entry level, because I'm confident with comfortable with the degree of separation that we've seen here so far. That should be relatively safe if this thing actually ends up tailing off. And to keep in mind that when we enter a market strategically using value as our entry logic, if you will, if we catch the wave just right or catch a valuation level just right, oftentimes we can see a degree of separation between prices and a degree of profitability that allows us to turn our trades into risk-free trades. Now, whenever we say risk-free, there's no guarantee, obviously, that we're going to get out at our stop level. But generally speaking, markets tend to, hit the stop levels relatively orderly most of the time. Although it's possible a market could gap up through there. So, understanding that's the risk with any type of stop placed in the markets. In general, I feel very secure that if I'm wrong about this trade, then I would be looking at a break-even situation, which is really a great situation to be in at this point. So if we can get this market to actually begin to sell off, we could see a correction very easily of a couple of hundred pips on the downside. So I will be watching for this market to correct at least, I would say, 100 pips from this level we're at right now, so taking us down maybe even to the 130 level, and I would be looking to potentially take my profits at that point in time if I'm fortunate enough to see this market actually sell off. So we'll continue to watch this market and see what happens here, but I think longer term I would expect to see, I guess there's some question marks there about where this market's heading longer term, but certainly on the short term basis I do expect that there's a reasonable chance here for a sell-off to continue.